XRP's recent resilience has ignited fresh debate over whether it can next scale the $4 threshold, with many pointing to a confluence of on-chain metrics, technical breakouts, and whale behavior that hint the most profitable phase may already be underway after the coin's founder Chris Larsen offloaded 50 billion XRP. In a headline-grabbing sale last week, traders braced for a repeat of the sell-off that typically follows large insider exits instead. Monday saw XRP holding above $3, whipsawing through the old $2.95 low, only to rebound strongly, suggesting that the market's reaction function has evolved. Sentiment's supply distribution indicator reveals that addresses holding between 10 million and 100 million XRP have actually increased their balances, now collectively sitting on a record 8.31 billion XRP, or roughly 14% of total supply in practical terms. The very whales suspected of selling at $2.95 chose instead to accumulate, providing a base that has encouraged retail holders to follow suit concurrently. The XRP ledger itself is witnessing renewed vitality, over 11,000 new wallets created on July 18th, and a sustained average of 7,500 new accounts daily since then point to growing on-chain demand. That uptick in development activity is mirrored in XRP's performance relative to Bitcoin, a 30% outperformance over the past 30 days. Underscores its strength against the market leader. Traders scanning the charts see several critical support levels that must hold for the uptrend to persist toward the $2.95 region, doubled as March's low and confluences around the monthly VWAP and rolling VWAP, marking it as a liquidity zone that swept up approximately $1.3 billion in open interest liquidations. According to Dom Trading's analysis, beneath that lies the $2.80 zone, a level that, if breached, would cast doubt on the entire structure and could signal a deeper retracement back toward $2.50 or even $2.20, however. As long as XRP remains above $3, the bias leans bullish, especially if trading volume accelerates and it surpasses the 50-period simple moving average at $3.30. A clean break above $3.66, its multi-year high, would open the door toward first targets at $3.82. The 2.618 Fibonacci extension of Wave 3 in Elliott counts, and ultimately toward an even loftier $4 region, a level that anonymous Elliott analyst X-Force Global dubs the gateway to Wave 3's profit zone. Elliott purists note that XRP is currently in the third wave of its 5-wave sequence, historically the strongest driver in impulse structures, bolstering the case for a swift ascent. Experienced trader Peter Brandt adds further technical intrigue, suggesting XRP has formed a rare compound fulcrum continuation pattern, a configuration that has previously presaged explosive breakouts, applying a theoretical upside to $4.47 if momentum remains unbroken taken together. Whale accumulation, network expansion, Elliott wave thrusts, and sophisticated chart patterns create a compelling narrative for $4. Yet no analysis is complete without weighing the risks. The specter of additional large insider sales remains, particularly if Chris Larsen or other early architects decide to offload strategically, potentially flooding exchanges with tens of billions more. XRP regulatory overhang is another critical factor. Despite recent clarity around certain jurisdictions, XRP's status under U.S. securities law remains precarious due to the SEC lawsuit against Ripple, which continues to cast a long shadow over institutional uptake and exchange listings should the court outcome tilt against Ripple. Participants could be forced to divest, triggering a cascade of sell orders. Moreover, the very leverage that amplifies gains can magnify losses as XRP's price climbs. Leveraged long positions, some reportedly held by well-known whales, become increasingly vulnerable to margin calls if volatility spikes. A sudden flash crash, perhaps triggered by algorithmic sell programs, reacting to profit-taking thresholds or stop-loss clusters just below $3.30, could ignite a wave of forced liquidations, dragging price far below key supports. Thinner order books at higher price levels expose XRP to exaggerated slippage. Any substantial downward move risks cascading into a broader crypto market sell-off. On-chain data from exchanges also shows that total XRP reserves, while currently supportive of a supply squeeze, could swell rapidly if whale transfers reverse, dampening the scarcity narrative fundamentally. XRP's use cases must also justify its premium, while the growth in new XRPL wallets signals renewed developer and user interest. The ecosystem still trails Ethereum and Solana in smart contract innovation. The arrival of DeFi and NFT projects on XRPL is promising. Yet until a critical mass of high-value applications emerges, XRP's utility story could falter enterprise adoption, though supported by major proponents like Western Union trials and select banking partnerships remains limited compared to public chain competitors should those pilot programs stall or regulators impose stricter KYC/AML requirements. The market may recalibrate XRP's valuation downward, prioritizing chains with clearer compliance frameworks. Nevertheless, the bullish case holds water if the supportive technical structure meets macro tailwinds. Broad liquidity, inflows into cryptocurrencies, driven by central bank easing or renewed institutional allocations to digital assets, would amplify demand. For XRP at $3 plus levels, rising on-chain usage fosters a virtuous cycle. Higher transaction volume translates to increased network fees, which under future fee burn proposals could reduce net XRP issuance and tighten supply. Coupled with whale accumulation patterns, such on-chain fundamentals could sustain a climb toward $4 or beyond. In conclusion, XRP's battle for $4 is unfolding at the intersection of whale psychology, network fundamentals, technical patterns, regulatory realities. The accumulation by large holders and robust ledger activity argue that this most profitable phase may indeed be underway, with Elliott wave and compound fulcrum patterns providing clear price targets, yet insider selling, regulatory uncertainty, leverage, risk, and relative ecosystem maturity inject non-negligible headwinds. The next weeks will test whether XRP can convert its solid support foundation into a sustained breakout, or if profit-taking and external shocks will pull it back into a protracted consolidation. For traders and investors alike, the pursuit of $4 must be tempered by an unwavering focus on risk management, scaling entries, respecting key support levels, and employing appropriate stop-loss and hedging strategies. Only then can one truly navigate the tightrope between XRP's explosive potential and the steep cliffs of crypto volatility. With that, XRP's quest for $4 sits at a pivotal crossroads, powered by whale conviction, technical breakouts, and on-chain growth, yet shadowed by insider selling risk and regulatory uncertainty as the market's most profitable phase unfolds. Success will hinge on whether demand can outpace any sudden supply shocks and whether network fundamentals continue to strengthen for those once again eyeing altcoin breakouts. Disciplined risk management remains paramount. Watch key supports, heed volume signals, and prepare to adapt swiftly as events play out. If the stars align, $4 may be just the beginning of XRP's next chapter. If not, a more modest consolidation could await before any renewed push higher.